This is our Forex blog for June 17th, 2011. And like most days, we really want to buy the strongest currencies versus the weakest. Until about 5 o'clock here, the dollar was strong, the yen was strong, and the pound was weak. The euro was weak until about 4:30 or 5. Here's your first sign that possibly the previous downtrend might reverse and go up. A little bit of strength, weakness, strength again. Usually when strength comes back that fast, the weakness is over. But until about 3:45, you could be trading the euro dollar short, euro yen short. And if you look at this, this one double topped yesterday, pulled back, came up to the hourly. That was a decent place to go short. And a little bit after 4, this one became extremely strong, which you can see here. Extreme strength. Usually when currencies find resistance at the hourly moving average, find resistance again, and then they break out, you typically get a 20 or 30 pip move. This one broke immediately through the previous day's high, went right to one of my Fibonacci levels, and then continued up. I actually shorted whenever the market's way above the upper containment band. Usually you can scale into a pretty high probability trade. I started trading right around here and saw this double top, got short around 42.86, something like that, and then it pulled back. And I knew it would come down to the 50, but I wanted to go get breakfast, so I got out somewhere around 60 right here. I made 26 pips on that. Fibonacci profit target levels usually are the end of the move. Now this one didn't continue down. It kept going up, but if you shorted every little move up, you made money. Shorted here, you possibly broke even. Shorted here, maybe a little bit of money, and this last wave up, it hasn't pulled back yet. This one's I think more likely to pull back than not, but being a Friday, you can't really hold it overnight, so you got to be careful. The euro yen until about 3:30 also was a high probability short. This one double topped up here, came down to the hourly, same exact pattern, opposite of what you saw in the euro dollar. Hit the hourly, and broke. Like I said, you can almost always catch 20-30 pips in there. If you shorted this at 25 and even got out halfway into this range right here, you made about 18 pips, and if you waited for the bottom down here, you did even more. The euro obviously wasn't some of the best trades. Once the dollar became super weak at 5, the euro was one of the strongest pairs. Now unfortunately the weekly and monthly trend is down. We don't really have any currency to trade it against where it's strong against all time frames. The yen was very strong in longer term time frames, but not in real time. So there really was no perfect trade against that super weak dollar, but the euro without a doubt was the strongest, and it's pretty safe to assume after kind of extreme strength and then a little bit of a pullback or two, for that trend to continue. Now, because the euro was so weak over the last few days, I wouldn't have expected such of a move up, but taking the first trade after this pullback at 50 was a pretty high probability trade. You could have made about 25 pips. When it's above the upper containment band, it's pretty risky. If you're going to, take high risk, lower probability trades, try using our FX IntelliStop on a smaller time frame chart. For example, put it on a 2 or 3 minute chart, and it is pretty exceptional at letting you get in and out of high risk trades. You might make in some cases 20-30 pips, other cases 10. Here is this pullback right here. You might have went long at the 50 and then out right here, like I said, for 24 pips. Kind of went up a little bit, pulled back, went sideways. Pretty high probability place to buy. You're in here at 78. Now, when the market's way above the upper containment band, I would not wait for the trailing stop to get hit. If you have a very nice little profit on there, draw your fib target on there. Notice to the exact pip here at 14. If you had bought this at 81, 30 something pips in a risky trade is a high probability thing. But earlier today, when the market broke out from the hourly, you can see it pretty much caught all the move there. You got long again here, small profit, a long again here, and it kept you all the way in here until about 80. If you bought that little pullback or breakout right here, you made about 50 pips on that trade. The faster the time frame, 2 minute in other words, it's going to have a tighter stop than a 5 minute or 10 minute. If you're a longer term trader and you think you've nailed the high and it's going to go down for the next 2 or 3 days, you might want to trail it with a 30 minute or 60 minute bars trailing stop. CAD, very weak today. and for about an hour and a half earlier. Later today after 8, you could have traded the Euro CAD on the long, or I'm sorry, yeah, on the long side as well. Strong Euro, weak CAD, and I actually would have preferred this one because this one wasn't at and above the upper containment band. The upper containment bands usually contain price, and it doesn't usually, most days, go beyond that. So, here it broke out from below to above the previous day's high, kind of double topped right here. Came down 3 times and didn't break this level. It's pretty high probability to break out, and this is your profit target right at the upper containment band, 13. You have a good chance of making 30 pips while risking 6 to 12 pips. That's a good reward versus risk ratio. I try to only take trades that have a potential of going 2 times my initial risk, and using a trailing stop on this one. If we put our FX and telestop on here, you can see and the farther up it goes, you might want to drop your, when it's above the upper containment band like this, you might want to drop down to a 2-minute trailing stop. We're going to actually adjust this in the future to highlight statistical areas. So when it's above the upper containment band, you might want to get out somewhere around here, 17 or so. But still, another high probability trade. And let's just look real quick before I end our Forex blog at how to know where the likely highs and lows are. I draw fibs and fib retracements each day, and you can see my Fibonacci profit target level was the high today in this. I made money personally at the Fibonacci profit target level here, right around 84 to 90. I scaled into it, got in a little bit early at 73, 80 something, all the way up to 94. It yanked my price up to around 86, and then I wrote it down. Actually, I was short at this second double top right here. Very high probability. You can see the New Zealand dollar. I also did a very good job of nailing the high to the pip. Fibonacci profit targets, especially when they're above the upper containment band, very high probability areas, and that appears that those are the only ones that got hit. They're usually pretty far away, and if they get hit, the market usually stalls or reverses. So, you can kind of start to build into a counter trend trade at that level, and if you're already long, they make phenomenal profit targets.